Assalamu alaikum. As we have covered our first five chapters of our presentation of financial accounting. So now we are moving to our sixth chapter, which is the merchandising companies, and we are going to present the core operations of merchandising companies, exploring inventory systems, costing methods, and strategies for success. So, if we discuss the merchandising companies, these are different companies which prepare the different products or resell these the different products which are being manufactured by some companies. There are two types of sellers. Some are those which sell the products as wholesalers, as they don't sell to the general public. But there are some retailers which sell their products to the general public as they purchase from the wholesalers. And there are also some big companies which actually manufacture these products and then provide to the wholesalers and retailers. So we move next as we discuss the operating cycle of merchandising companies. The merchandising companies, first of all, purchase their inventory or products from the wholesalers or from the manufacturing companies that are manufacturing those products. So they purchase different products in different communities that which they feel that these are suitable and they will be able to resell these products easily. So after purchasing all of these products, they sell these products to the general public. The retailers and wholesalers sell these products to the retailers. And after the sale of these products, the process is to collect the money for the products that they have provided. So the wholesalers, after providing these products to the retailers, they collect their money from the retailers. And next, we discuss the income statement of merchandising companies. As we already know that the sales generate the revenues for these companies, and after having the revenue or for earning these revenues, there are some cost of goods sold which are being occurred for operating those activities, and we subtract these cost of goods sold from the revenue, as it gives us the gross profit after deducting the cost of goods sold from the revenue. So, after gross profit, there are different operating expenses, as we have already discussed, that like salaries payable, wages payable, and some other expenses like utility bills. Then these are being subtracted from the gross profit, which gives us the income before taxes and interest. Then the interest is deducted from that income, and after that, the taxes are also being deducted, which are implemented by the government. And after that, it gives us the net income. So there are different systems which manage these inventories of these merchandising companies. And commonly, two systems are being used, which are perpetual inventory systems and the periodic inventory systems. In the perpetual inventory systems, whenever a transaction is being made or a commodity is being sold or purchased from the merchandising companies, or if it's sold to the general public, the tracking of these inventories are being made and the transactions at the moment are being recorded, so that the every record must be clear, and they must have the idea about the inventory, as it improves the control of these merchandising companies over the managing of these inventories. And these perpetual inventory systems are costly because they have to record every transaction which whatever happens in the company, whether they sell or purchase any commodity. So they are to record, and recording you obviously takes time, and also the employees that will record all these transactions. And there can be some potential errors like the human, it can be a human error in uh, recording some transactions in the statements. And the other system which is commonly being used is the periodic inventory systems. The periodic inventory system is the one in which the transactions or the records are being made at after some time and after at some specific dates. And these are the cost effective because these in this case they do not have to record every transaction, but they made the records of these transactions after some time that they have decided. And it also simplifies the management because the tracking of the inventory is not that much difficult as in the perpetual inventory system. And there is limited accuracy because the inventory levels are only updated periodically, leading to potential inaccuracies. And there is also the high risk of stock outs because they are not having the control with every take out of the commodities that they are having in the company. So it might get out of stock at some time, which will be difficult for these merchandising companies. So next, there are also some inventory shrinkages. So there are the causes and prevention which must be known to the merchandising companies. And this, first of all, there might be the theft in these companies, as these thefts can impact the inventory levels of these companies because they are not aware about these thefts at some times, and they might get out of stock. And there are also some damages as the time passes. There comes some breakage or spoilage in the inventories that the merchandising companies are having. And for counting those inventories, there might happen some errors, which might also give the shrinkage to these inventories. So, for recording these, the amounts of these commodities or inventories, there is a form which is called taking a physical inventory. In physical inventory, the physical count of every inventory is being made. So for this purpose, there needs some plannings for regular physical counts, including the time and scope. Like the if we are recording or taking physical count of a commodity, then we must take it on the regular intervals. We do not left it, and then there must be some preparation which ensures the adequate resources, including personal equipment and checklists. And then there comes the counting. The counting must be accurate and there must not be any errors, which can make it worse for the merchandising companies. And the reconciliation of these inventories is also necessary, that what they have in hand and what they have on the records that they have made. And documentation of keeping these records is also necessary because it gives them the valuable information at the time when they need those informations. And then there are some inventory costing methods which are FIFO, LIFO, and weighted average. FIFO is the first in, first out, and LIFO is the last in, first out. In FIFO, those products which are purchased first are to be sold first. But in LIFO, those which are purchased lastly are to be sold firstly, and they are given the importance to be sold on the earlier basis. And the costs of these are then calculated on this basis. Then there is weighted average in which the cost of all the products are taken, and then it is being divided by all the products that they have on hand. These are some costing methods. And then we move to the inventory management strategies. The first one of these is the demand of forecasting. So predicting future customer demand to ensure adequate inventory. So every company, they must be known that what they are going to need in the near future and how much demand they are going to face by their customers. And then there comes the vendor management, which is building strong relationships with suppliers for efficient inventory procurement. And then there is inventory optimization, balancing inventory levels to minimize stock out and excess entry. So there must be a normal of it, like they do not face a phase in which they do not have any inventory, or they must not stock excess of the inventory, which gives the loss to the companies. And then there comes the turnover analysis. It is the evaluating the efficiency of inventory movement and identifying areas for improvement. So lastly, there are some key takeaways and actionable steps, which is the understand the operating cycle and income statement are fundamental to merchandising. And if they are well known and have well knowledge about it, it will surely help them to manage their merchandising companies. So these companies must also choose the those systems which are suitable for them, and they must implement some strategies to minimize inventory shrinkage and optimize inventory levels. So it is all from my side. Thank you.